Okay, let's get started, guys. Good morning. See how many people are coming on today. Let me know if you can hear me clear. All right. Let's get up and running. Okay, welcome to Trade Setup, the overnight review. We'll just go through what's happening, where we expect the market to open. I expected it down about 20 points, 25 points, or thereabouts, on the ASX on the open as the US just drifted lower. Okay, Lauren. So the US drifted lower last night. You can see that this is the SPY here, so the action on the SPY was just measuring that out. So that's the first leg up. We built a bit of a base around 64.95, and that roughly extended the full amount, or we call it volatility extension. So that's your first sort of move. You pull back to build a higher low, and you have your secondary move up of this leg down. So this leg down was basically unchallenged, I guess. Just basically pushed straight down from that 67.28 all the way down to 64.25. So the way it's contracting back up leads me to believe that there's some downside pressure to come than anything else. Otherwise, you might have got a bit more of a retest and a bounce straight up. But the market, just by looking directly at that, the market is still sort of drifting higher, still a little bit more stagnant. Yeah, it was. It was just no. It had a normal session, I think, Lauren. It said it's bank holiday, as far as I saw, and I was surprised to see. I think the indexes were trading until about 6. Let's just check that. We're trading until about 6 in the morning. That's not what I want. Dow. So that's a Dow index. That closed around 6:30 this morning. So a normal session, just a very light session. I think it was more the bonds. The bond market was closed. Equities are still open, but they didn't have much of a lead from many of the markets, obviously. So I think it was a lot thinner than normal overnight. So yeah, that's the extension higher. So that's why I'm sort of viewing this. You've got the overhead sort of supply zone, resistance zone. Market's pressured down, sort of bounce back up. I mean, if this keeps grinding back up, it just doesn't show a strong, enthusiastic market. It's more a bit tentative. So you had news out overnight that China said we're going to need more talks before we sign anything for the partial deal. So they come out and it's like it's already started, as in the cracks are starting to appear already after about a couple of days. And then I think it was Munchkin, I call him Munchkin, Treasury Secretary, US Treasury Secretary, come out and said, basically, not threat, but just warn them, we're going to raise rates, we're going to raise tariffs, sorry, if you don't come in and do what you're told, in a way. So that was interesting. They're both going back and forward, which you'd expect. So I think what that's done is just the market's rallied quite hard a couple of days, and it's just people are starting to think, is it the same sort of thing as we've seen before? They try to take a couple of steps forward to buoy the market bounces hard, and then nothing actually happens. So I think there's a lot of people who will still be waiting, especially analysts and things, still waiting for hard and fast confirmation. Now you're coming into earnings too, and they're looking at industrial companies, looking to see what they report, how they go, and what they talk about going forward, just to see if they're going to start spending some money and support the economy. But if they don't, I mean, which you wouldn't expect them to say too much, because tariffs are still being imposed and it's still going to crimp them. I wouldn't expect they're going to sit there just on a couple of comments from Trump and say, yeah, we're going to start spending next quarter, next year. So yeah, I think we're not going to see anything severe out of that. Just get to the overall. So the SPY is just opening up slightly from where it closed, nothing significant, just a clean out really. So the trend has been trending off that high. So it'd be interesting to see like we just mentioned, that was pretty much your full leg up before we've had contraction. So it's just to see where we contract to. It's around the top third, close to half retracement, somewhere around what 65, 77, 75 thereabouts, which would probably bring you into some sort of support through here. It may be that the market pulls back into that zone and starts building a bid. Again, it's really hard because that's what I'm just describing, is sort of your natural flow of things without too, if the market's heading higher, natural flow, pull back a bit, 1/3 to 2/3, you want to be looking at potentially 1/3 for a strong market. If it pulls back, say 30% from the highs for the leg up, that's a stronger market. The deeper the correction, the weaker the market. But that's, like I said, that's sort of your natural flow of things, not when you're up against tweets and you're up against news flow, and the market's very tentative when it comes to news flow at the moment. So it is doing a bit of a clean out of some shorts. We'll see what happens, whether it can actually build. If it can start to build today, potentially build some higher lows and give you some sort of action that looks like it's going to take it up to at least retest 48, 66, 48 or higher. We'll be keeping an eye on that. Otherwise, it's just going to keep drifting lower. You'd probably be looking to drift lower today. I think the market's going to be waiting for more news before it gets ahead of steam. That's my view anyway. I don't feel you're going to be wanting to jump your gun and start to buy, especially after a couple of good days of solid move, solid price action higher. And you go and look at, or just look at all the markets sort of linked to trade. Obviously the Dow, that sort of looks to me like it's going to roll over and fill that gap. That's the Dow index. So to me, that looks like it's potentially going to roll over, fill that gap at 49, say 26,500, which is another 200 to 300 points lower from here. Could do. It's looking a bit heavy, like this is a potential lower high. You've got a minor double top, and it's retested this liquidity zone up at around 27, just above 27. So that could easily push down. It could still retest the gap and hold. It can hold a higher low. So there's still all these sort of factors you got to keep in mind. Are we going to trade higher because we've reacted? The markets are already reacted to a partial deal, and now they're going to start to wonder. The more that nothing comes out, the more that you're going to start to wonder: am I loaded long for no reason because it's just your typical market buoyant news or market supporting news rather than anything significant? Like I said, I think most of the big banks and the analysts are looking for more substantial news, something that they can hang their hat on if they're going to start to buy into the markets, whereas markets can easily be flicked around on low volume and news driven. So that's the Dow. We've got currencies. Sorry, the Aussie started backing off. So when that's backing off, they're a bit negative into the news, into trade, anything getting sorted out, because we're reacting lower every time we look like it's going to there's no trade deal. So it did pop up on Friday, for a couple of days, did head high, you can see. Whoops, not wrong one. I was pressing the wrong one there. Did head higher on the back of that positive news about a partial deal. As soon as it came out, it's tipped over. So I think that high was made Friday. So it just backed off once it sort of held up to that liquidity zone or potential resistance zone, previous highs. Then it just started backing off. People were just starting to lock in gains from that move up, knowing that don't expect anything significant, but it's got a bit of a head of steam on the downside overnight as well. It did bounce, but that sell-off was pretty much from late afternoon yesterday into the start of the European session. Got smacked down to European, then got buoyed back up, which is a bit unusual, but that you would assume that's more intraday selling, intraday, and they're not willing to hold it because there's two things. You don't really want to hold it, so there's probably the shorter term traders are having a bit of fun at the moment because you've got one thing, you have got a partial deal, so you can look at it. That is steps in the right direction, and they're going the right way. So you don't want to be loaded short on the Aussie, for instance. But also, there's nothing really substantial. So it's an each way bet at the moment still, and that's why you've probably got this, short selling here, and they started to close into the US Open as the US dollar started to, be supported. The US dollar was supported overnight, so it wasn't anything significant either way on the US dollar. It was sort of opened up early hours yesterday morning, and pretty much was range bound for most of the session, gradually edging higher, which pressured the Aussie a bit, but that's got more to do with trade. And I'd assume just coming to the US, you never know what's going to happen to the US session once Trump wakes up and he's got his finger on the Twitter account, and you're better off just closing any shorts or booking some gains when you've got a chance. So I think that's what more that move was due to. And you got oil, a bit of the same. Oil got smacked around on the news of China's, China comments about needing more, another meeting, and then it bounced back. So it's more intraday action, chopping the market around. Gold, we've got gold here. I've still got my eye on this one because I think we've had that washout. We bounced back. We're looking to buy through 15.20. It didn't play out that way because of the partial deal. Pretty much got sold off, but it's been still rejected in 15. So it's not, that little spike line got bought back up on that candle, the daily candle. If we go down to just try a 4-hourly chart, that sort of rejection that's bouncing back. It's not, look, it's not strong and it's not weak as such. You would have thought if there's a serious deal done, the market was seriously convinced that this is the step in the right direction, and it's the first stage of making an overall major deal, a final deal, then gold would be heading south without a doubt. But it's not. There's still some safe haven queries there. Anyone that's getting short is not willing to hold it for too long. They're getting short on the premise that the market could tip over, but when it doesn't show any sign, they're quick to get out. So you got to imagine that just means there's still that uncertainty around the market. So, but I'm still not convinced that this is not heading higher. Still got the eye on that 15.20 zone, but it's going to be news driven, which if it's going the way it's going at the moment, where China want another deal and the US start to pressure them, because the US will always come back firing out, we're going to raise tariffs again. If just do the deal, and China going no. So if that's the case, then you expect gold to start getting a bit of a leg up, especially if the overall markets, there's some reporting that's not expected to be too good. We're coming to reporting now. I think the banks are, in the next couple of days, starting to report. If they get lower than expected, and then you got industrial companies, manufacturing start getting lower than expected and don't give a pretty picture for going forward for the fourth quarter, then this market could tip over, and then you get gold to probably, you expect to go straight through 15.20. US yen found a bit of a safe haven yen bid, which pushed down, and then again shorts as the yen rallied, short into the US yen, not willing to hold it for too long again, and you get that sort of bounce into the start of the US session. The same sort of scenario. Let's so anything, like I was saying, the pound is actually looking okay. We're looking for the pound to rally. I am anyway, to see if we can hold around here and chop around and extend the move up into resistance, the offer zone, which we're calling a potential offer zone because it's only been tested a long time ago. But it's a previous high. You can see way back here, it would traded there quite a bit. It's pressed down, touched up. It found some selling quite a bit right up until it fell over and pushed down to was it 120.40. It's pushing back up there now. It's all on the back of Brexit. So the US dollar could do nothing. If they come out with some sort of positive news on Brexit, that'll spike higher. There's still a lot of shorts built up in the pound. Longer term shorts that are thinking, and they're going to have to think twice, that it might start to edge out, especially as talk of Brexit comes about, positive anyway, or turns more positive. That makes sense. That's it for the currencies. I was looking at the euro. Put out something last night just on TradingView about the euro. If it can hold, as long as it holds above this zone at 110, say even, that's your anchor to the trend up. It's correcting at the moment. We're trying to get, I didn't mind it through 110.37, which is pop through that straight back down again. But as long as it's holding up above that 110 even, you're looking at about a 30 to 40 point stop. If we press up now through, back up through 137, I'd assume that that's going to start to rally and get a bit of a run on. If not, and it breaks this anchor, then that latest uptrend is over that we've pressed up since, the 1st of October. So, which I don't think is going to come about just yet. I think if anything, if a trade deal, if they talk up another trade deal, that US dollar will probably sink and euro will rally. And there's also positive on the euro is Brexit, or potentially positive on the euro, but we'll see. That's it. Let's just see where the index looking to open, down 5. So we're expecting, like I said, down 20 or so. Market might be a bit more subdued because it wasn't a big session last night. The SPY is holding up around the same level it closed at, which would suggest 20, 25 points down on the ASX. As long as it holds around here, if it starts to spike too hard, then expect more of a slightly negative open as opposed to anything else. So, all right, so for today, I'm not looking for it to get out of hand on the upside. I think, for us to start rallying and trade up towards that 48 zone, I think we need some news, a bit more news driven. The market is still, it's tossing up between, should we keep going because of the partial trade deal, which could be showing some cracks already, which you wouldn't think you'd be jumping and buying on the back of that, or any of the big funds wouldn't be jumping and buying, because with the thought where that falls apart, the market's going to go lower, over the next few days or weeks, potentially. So why would you be diving in just now? You could be edging into a bit or have shorter term trades, shorter term plays, but you're not going to be diving in with the bulk of it anytime soon, thinking that the trade war is over, because it's really just one step. And when you think about it, they've gone through the same process before, but probably with a little bit less certainty, if that makes sense. It's not the word I'm trying to use, because it's a little bit more fluff this time. Yep, we've got phase one, so they've called it phase one of whatever. Yet they're not doing anything different than what they've done before. China have already said they're going to buy up, US commodities or US, farming goods or whatever it is, and they didn't. They pulled out of that. So what's to say that this is anything different now that they've come out and said we need to talk again? It's like they're not certain, they're not happy. Obviously, you don't need to talk again if you're not happy. If you're happy with phase one, done. It's done, and then you just go ahead and sign it. But it's not at the moment. So I think that's going to keep a bit of a cap on the market. I think this could be, maybe we're just setting up for a bit of a pop and then head south for the session. We might get a bit more of a positive open, as in not down 25, but down 10 or so. The SPY might hold around here, and then we could fall over. This ASX we've spoken about before, that sort of sudden push down, bit of a grind up. It's probably easy to see on the 30-minute. We'll just go to. You can see that sudden sharp move down. That was all in one foul swoop, down, down. And then we're grinding back up. We've made back pretty much, what day was that? That's not 2nd of October, is it? Okay. So we've made back that move. We've grinded our way back up. We're nearly back up to this zone above 67, but again, we could still come under a bit more pressure. This grind up doesn't leave me too convinced that we're going to see majorly higher prices anytime soon. I think there's still a lot of water to go on the bridge before anything's sorted out. And China have already hinted at that. All right. Well, guys, any questions before we call it a day? Anyone wanted to put up something just to take a quick look at? So if you wonder about trades from yesterday, I didn't see any. This was choppy. We looked at this as being a bit of a washout on the open. We drew that up yesterday. There was a trade in here. Obviously, in hindsight, I was potentially looking for that to bounce. I was looking for a short there and got sidetracked. I didn't think it'd come straight away, but I was looking for some sort of short in there. It did. I guess you can look at that. Very, very minor sort of levels. You got a resistance through there, and once it started fading, you got this pop up. This was your anchor at that stage. If you just draw it up, continuous, you got the move down coming 1, 2, 3. You can see that was still holding. Okay, so you can see it didn't. That trend was still down, even though it touched up on this level. It built an inside level. You're just going to note a lot of this time they can build an inside higher low, for instance, but the trend is not broken until it got up through, say, 66.48, which is this most recent lower high. And if it does, just because even if it washes out that level, people will buy on the break of this level, saying, "No, it's broke the inside. It's broken a higher low." Sorry, the most recent lower high, but it's not a lower high, because you'd want it to confirm by retesting the lows way down at 37, but it didn't. It fell short of that. So I don't consider that a retest. I consider the anchor for the downtrend still up at 48, and it didn't break that. Even if it washed out and the candle turned red, you'd still be looking on the short side, and you'd still be biased short off the highs, especially that we pushed up, traded through that level at 50 and fell back below it and then couldn't get up through it again. You know that there's going to be a deeper correction, potentially to test the open, which it did eventually. It didn't to the close, I think. It fell over into the close, say from 330. Don't know what happened there. So yeah, that was my view on that. So there was a bit of a short. That's what I was looking at. Just didn't get anything off. Probably wouldn't have. My style of trade wouldn't have lasted too long. Would have made probably about 6-7 points or so. Let's So you've got two. We've got to put up APT. APT. I don't like that stock now. It's been a bit of a bugger. APT. So what are you looking at on that? That's just so strong. Like I said, there is more and more getting factored into APT, and I just don't trust it. The fact that they're not really making any money just yet. It's all about on projected earnings. Well, unless I've got it completely wrong. From most of what I read, they've still got a fair bit of debt, and the earnings is not covering it just yet. It's all about the US and European markets or UK market, these sorts of things. I think sooner or later you have to start factoring in they don't have a monopoly on the market, and there's more players coming online. So is this going to be fair value unless they start turning over massive profit soon? Either way, in saying all that, the trend is up. I just can't bring myself to buy it up here. And I don't normally look at fundamentals, but I just can't bring myself to buy it. You look at that weekly, I think it's ahead of the MAs. I'd rather see a pullback to the MAs, something like this, a correction, a major correction, and that looks like it's going to hold, and you can see it's popped up, pulled back to the MAs on the longer term, corrected, pushed up, pulled back, corrected, gone again. So I think maybe we're late into this latest trend up since August. We're getting late into that. It is well and truly extended. How much more buying is there going to be before we get a correction, which is bound to happen? Is it going to be a complete topple over, or is it going to be just a correction like we've seen? These last two corrective price action, correcting back on the MAs, taking some heat out of that move, getting people to go back on the sidelines, pushing them back onto the sidelines before it starts holding again. And then once it starts holding, then you've got your entry potentially in here, thinking that it's going to hold and it pops straight up. We were looking for a short then, to be honest, didn't play out, turned around and went straight back up again. So there's still a lot of positive sentiment into APT, and if you're holding it longer term, why would you close out? You need something particularly to change, and it still is a bit of a favourite. So yeah, heading higher for sure. Intraday, I know you trade intraday there. Let me have a look. Intraday, I'd want to be seeing a bit more of a spike higher. I'm more always, well, that's not looking at a 5-minute chart than anything else. I think yesterday was no action. The last few days has been not much action. You want something like this. You probably want it to gap down on the open and start to fight back. Nice entries in here. Nice entries in here for me. You got that first push down, pops back up, which you always expect, some bargain hunters, and then the second push down goes nowhere, and then you want that deeper pullback, especially with the overall trend up. I think that looks good. There's nothing in here. Not even a short off here. I wouldn't be shorting such a strong market on the intraday anyway. EOF, let's look at that. And then we'll call it a day there. EOF, I know you like this one, Lauren. Have you actually got a bit of this, Lauren? It's starting to look handy. Now I can never remember whether we had it, got stopped out, or we didn't get in. No, we didn't get in on this one, did we? I think there's no use really. The weekly, I know that's the weekly, and there's not much data there, but it's heading high. You can see expanded, sold off, expanded a bit. It's held an inside level on the weekly, which would suggest that we're going to expand through the highs. In my view, it's just these last couple of weeks which have been capped a bit, and that's probably because of there is still a lot of fear out there, and if you've got this from the IPO and you're getting concerned that it's not going anywhere, and the overall environment's a bit of a mess, the global environment's a bit of a mess, you're probably going to take some off the table. You know that. People will do that for sure. If they bought it up here, they're going to probably wait. All right, but overall, that's looking more buoyant to me than what I thought it would be. It's just this little grind up. I would have liked to have seen this bit of getting extended, then a pullback, go and get a pullback. I'd rather see it at least retest this high at 47 on this move up. And I'd rather have seen, extend up a couple of days like we had here rather than extension up straight back down and then grind up, down. Because it's still, I think it's only just broken out of that trend if I can draw that. I'm pretty sure. Am I thinking about something else? So you've got your basic, your top up here to be concerned with. I call that just a washout. Don't take much notice of that. And if you're taking it from there, you're probably, that is a break, but it's nothing serious. If it starts to lift from here, I'd be inclined to be buying it, say, through 340, because it is biased to the upside more than anything else. And you've got, support through 370. It's grinding up through here. Even if you're taking that sort of a level, it is, to me, it's coming to that point of agreement and it's starting to tip to the upside. Yeah, fundamentals. I know you were telling me about that. Fundamentals, I think this has got the fundamentals to support it. I just don't believe, say, APT, for example, does at the moment. Yeah, it's all about growth, potential growth, and everything you read on. Anytime someone says about the fundamentals on APT, oh, they're negative, not turning over a profit, They always say that the growth is, and it's always backed up. They always support the share price with the potential opening up the US market and UK. That's fine. But sooner or later, that's going to come to a point where you show me the money type of thing. Whereas I think EOF is actually supported by pretty good, solid fundamentals and earnings, from what I understand. And the technical is looking good. It's probably just not out to that wider audience just yet. But when it does, expect it to get a run on. So yeah, that's my view on those. I don't mind those two. And even, I know QFE is one we've had and lost on. It's bloody annoying. Took it here probably a bit late. We probably, after this move up, when you get up to the highs, previous highs, it's just wanting to take more of a pause. So this might be the pause it's taking now. This is all we need. I mean, maybe a push up through, even back up above 50 from here. Could be a long, or more than likely up through that high at 52.5. Might be the go. The way it pressed down through, we got stopped out just here at 49 from 52.5, something like that. We bought it around here, it popped up, went straight against us pretty much. But that stopped out there, and then it got held up here, right on the MAs. And if you can hold these MAs and start to lift again, that can start to expand to new highs. And you would expect this time round, you take it from low to high, and if this is going to be the low to high, you would expect it, just say 30 up to 58. What's that? 28 cents. Add it to around even 40, 68, 70. Is that right? Around 70 cents. So it's got a fair way to go. And this second time around, if it expands to new highs, it could look really nice. So definitely got my eye on this one too. You're going to have to remind me, Lauren. I've got a habit of getting myself too busy looking at intraday stuff. Yeah, so SPY is still holding in there. The market is up or down only 17 at the moment. Yeah, it's a little bit better than what we expected. So we'll just see how it plays out today. But yeah, just keep an eye on things. Good luck today, and we'll speak to you again tomorrow. We'll finish it there. All right, guys. Net. Let's have a quick look then. Just before I say goodbye. I don't mind this either. This is one we had an alert and it didn't quite play out. I can't remember where we exactly had it. But net, go back to weekly. Well, don't worry about the weekly. Weekly's a bit of a joke. Did nothing and then started to lift. March this year. Lifted. So this expansion, when you got such a severe sort of expansion higher, you expect a deeper correction and it has to build again, build off a higher low. You get these people starting to bought it late, either squeezed out, booking a profit. So the later you bought it into that trend, the more on edge you'd be, and the more likely you're going to close pretty quickly. Whereas people that bought it through here or even off this level around March are willing to hold it a bit longer. If you bought it here and you didn't take any profit at all, you'd be more inclined to just wait till it gets below. If it takes out this level below 8 cents, 7 cents, and you get stopped out, okay, you lose on it, but because you want to give it at least some sort of chance, especially if you've got the fundamentals in the eye. You're watching those, and they're good fundamentals. You go, well, it's pulled back, but that's all technical. That's all psychological, not fundamental. It's more that it got so high that it doesn't matter what it is, they're going to start taking some profit. There's always going to be that threshold where people are going to take profits. If you don't recognize that, you're going to have some issues with your trading. But anyway, that's what we've got, that bit of a pullback. The fact that it's starting to look like it's holding a higher low at 14 as opposed to 12 is a really good sign for me. So it may have some work to do, and it could be very similar to, you know, that's not where I want. I'm just saying on a smaller, on a bigger scale, what we saw here, extension higher, pullback, pop, build a high low, and then start to just consolidate or contract. Contract means lower highs, high lows. But we'll see. Where is MYX? Yeah, it's probably off the cards now. Yeah, off the cards now. So that did trade. We had an entry on that at 61. It did trade 61 about a minute or so after I think I sent the alert, but only a few shares. So I gave it some room without saying it entered, purely because you want a bit more going through. So if you're buying on stop, yeah, if you managed to put in your order just then, yeah, it's probably in and out, which is a bit of a shame, but you generally want to see it trade through that level before you start diving into it. Or at least a bit more volume, which it didn't. It just traded a few shares, and that was it. It backed off the rest of the day. But it could still go. This, if it holds up around 56, I didn't want to give it too more room, because if it did go, you would expect it. If it trades through 61 and up to 61.5, 62, you expect that to go up to 64 and above. But it didn't. It just washed it out. So it's done that a couple of times. It did it on this candle, washed it, reversed, washed it, reversed. So it could be that it's going to be biased down. It might need to close this gap. Might still have some work to do to consolidate above those MAs. But we'll have to just keep an eye on that one too. Don't mind it still. It's just needs to take care of this day's action first. Oh, sorry, Laurent. Sorry, mate. You were the bloody quick one, were you? Have you still got it, or are you out? Not sure. Out. Oh, okay. Yeah, no, fair enough, mate. Fair enough. Look, you're better off to be. And this is the thing with trading. If this gets a run on, you could be up to $1 before you know it, and taking a 7-cent loss or whatever. And it's not even that, is it? It's a 4 or 5% loss. It's not much at all. If it can get up to $1, if this starts taking out 65, all of a sudden, if you're in it, say 62 again, out it goes through 65, you made it all back, and it's fine. So you're better off, in my opinion, and this is the same with the intraday. You're better off taking small losses than trying to guess it. And sometimes, I mean, I've done it many times. You're trading in a zone, for instance. Let's look at the SPY. It's mainly on the SPY, but you're looking for that. Say you're in here, you're looking for it to bounce, and you trade off there, and you get maybe you buy it on the rise, you get stopped out. You might buy it a couple of times, or even in here, you might be forced to buy a couple of times. But the aim is to take a few little stops, because in my view, you might get someone that lets it go and has a really wide stop. They're going to get tagged on their stops just as much, I think, as you will. I still think, even if you're sitting to a 50-50, you're 50% right, 50% wrong, 50-50 strike rate, I think I'm going to be similar, 50-50, no matter what time frame I'm using, no matter what size sort of stop I'm using. So I would rather take 50% of them on smaller, 6, 7, or 8 points. On, say, on the SPY, for instance, I'm always looking around 6 to 7 points. I'd rather take a few of those than a few that are 15 to 20, because you just want to give it room to move, because you're going to be wrong. And if you're wrong on 15 or 20 points, you need 15 or 20 points to get 1-to-1. Very tough on the SPY, for instance. Or you've got to hold it for a lot longer, whereas I'm too short term. So I'd rather take, maybe I might have a nab at it a couple of times, and it's happened more than often in the past. If I'm in the right zone, I may get stopped out in the first one and then make it back on the second plus a bit more and be net up for the day. And that's what I'm trying to do, really. I've been stopped out twice before I get it the right direction. And sometimes, you're net even, but more than likely because you're in the right, you're trying to buy it in the zone and you expect expansion out of that zone. You've got a good run on and you can make it back. So a couple of small losses is not really going to hurt you. If you take 4 or 3 in a row, you're probably going to be thinking twice about it. I normally, if I take one, I'm always not hesitant, but I'm watching a lot closely the second trade. And I'm really waiting for a bit more confirmation to confirm that I'm in the right spot. If I take a loss on that one, my initial reaction is I'm completely wrong. I've got it wrong. And generally, I probably have got it wrong after I do get stopped out twice. So if I get stopped out twice and get in for a third time, there's a good chance that I'm on the wrong side of the market and I'm going to get tagged on that third one anyway, and then I'm done. That's it. I won't bother trying again. Does that make sense? So yeah, that's me. That's me done. All right, guys, we'll probably finish up there. I hope you enjoyed that. Any questions, feel free to send us an email, and we'll see if we can get you back into main. We'll see what happens there. All right, guys, enjoy your day. I'll speak to you again. I'll speak to you tomorrow. Be on again tomorrow morning. Cheers. Bye.